Happy Friday, everybody! It's our first, what could we say, fall Friday? Because it is miserable outside today. It is cold and rainy and everything else.
It helps us appreciate the summer, though.
I know, because I'm like, man, it's way too hot, and now this, and I'm like, this is why.
I like this long sleeves weather. You know, I got flannels and stuff I can wear,
and
jackets.
I do, but I thought the weather was gonna be like it was yesterday. So here I am in a sleeveless, freezing my booty off and everything else. So it's Friday. This week's almost done. I'm so excited.
Hey, Brand.
What are you gonna say?
Nothing.
Oh, yes, you were.
No. We've got awesome show.
Is this a Craig behaving show today? Okay, interesting. It's a new one?
Yeah, I stay away from certain jokes.
Uh-huh.
Anyway, let's see. So what are we doing today? We got a show today, right?
Yeah, I mean, I think, we were going back and forth about show topics and whatnot, and I think, everybody's kind of really starting to panic. We had the Fed increase, the last Wednesday again. What is this, like our sixth one or something since June? And I think,
loud.
Yeah, that was loud. I forget you chew gum all the time. It's weird.
I just put this piece of gum in my mouth.
Yeah.
Because my breath smelled like coffee.
Ew, gross.
Yeah.
Agreed.
Yeah, and I didn't want to be like in your space.
Yeah.
Coffee breath in you. So spearmint gum, everyone. Spearmint gum.
So anyway.
Not a sponsor.
As I was trying to talk about what our show's about, so we decided to do a market analysis show, especially for those that are newer, that don't know how to pull up the numbers and all that kind of good stuff. Just kind of a...
market analysis show?
Like September of, since we just got out of that month, September of this year versus September of last year, to kind of see where we're at with all these changes that have been going on, and, to kind of let you guys know it's not doom and gloom.
Yeah, I don't
but
know.
But you have to work. Just saying.
Yeah. And we were going to do a show about a success story, but I got overruled.
I feel like we've done that show like 45 times before. So if we want to do it next Friday, we can do it next Friday.
Yeah, I don't know
except I won't be here.
I don't know if it's going to be Israel. Oh, I can do whatever I want next Friday.
Yes, you can. So I won't be here. So
talk to Carol. Carol, let me know if you want to do the show next Friday.
Woo woo.
So anyway, okay, so we're going to do a market analysis show. We're going to talk about, and we're only going to talk about, we'll talk about some parameters that we put in place. One, we're only talking about Lake County, Indiana.
Yep.
So, sorry. It does follow a lot of trends, but it's not as bad as some of the other markets. So, that's all we're going to talk about today is Lake County, Indiana. And we've got some statistics pulled directly from our multiple listing service. Are you excited about it? I'm getting excited. I love numbers.
I am excited to have Harry Carey on the show with me right now.
Hey, all right. I love Harry Carey. What a national treasure. He was such a great announcer. Okay, so... Wait, what
Brand, stop secretly texting Craig.
What did she say? What do you mean, what did she say? You're saying what my joke was going to be about?
Mm-hmm.
Answer my question there. What did she say? About what? Give me a little bit more, Brad.
Good
You're
luck
talking
with
about
that.
my joke that I decided not to do? She said, you said, she said, this is so terrible. Ignore me, zip it. What?
Exactly.
Well, Brad, I would like Brad to make this joke. Brad knows me pretty well. Let's say, hypothetically, Nicole's setup was, it's so cold, I'm freezing my butt off. What kind of joke would Craig make about that statement?
Interesting.
Would Craig say, yes, it is that cold? Or would Craig say...
We're dying.
Or would Craig do this and say, it's not frozen off yet?
Whatever. Shut up.
So, yeah. It's up autumn, so that's why I didn't make the joke. But thanks, Brad. You dork. So inappropriate.
Exactly.
It wasn't inappropriate. It's just
Inappropriate. Is that better? Is that the cool kid slang?
Well, that's from Archer. Yeah.
Okay. Well, cool. I'm just saying.
It's a good show. Funny show.
It is a good show.
Good. Another narcissistic-centric show that I enjoy. Okay, so let's get back on track.
Okay, Rick.
That's why I wasn't going to make that joke, Mr. Brad. What's going on, Autumn?
Hey, Autumn.
Okay, so here's what we're going to talk about. We already talked about the parameters, so blah, blah, blah. Let's get into the dang show. So we're going to start with, we thought we would start with 2021's numbers. September of 2021, Lake County, Indiana. There were 702 sales in Lake County.
With an, I was going to say with an average price point. of 248.8 and 36 new construction homes sold.
And I would also say this is only residential, no commercial,
Yeah,
multi-unit,
yeah.
no vacant lots, no farms.
Yeah.
Okay. So, that being said, that's what it is. 702 sales. Okay, that was pretty good. Average sales price of 248.8, like Nicole said, which is a total sales volume of 174.6 million in production.
Yep.
So, not bad, right? Okay, so that's 2021.
2022's, it's 621 houses sold. 266 was the average price point, and 44 of those were new construction. So new construction number went up, price point went up, but homes sold went down. Interesting.
Did you say the new construction for 21?
I did.
Okay, that's when I was talking over you. I'm sorry.
Yes. That's
Okay. All right, you guys heard that. Apology on air from Craig to Nicole. There we go. I didn't mean to talk over.
It really is. Is it that hot out? It's not hot outside today, though. Like, oh, so did hell freeze over? I mean, I'm just saying. I don't. That's kind of my point to that. That was the setup.
I could make a callback joke. Hey, Lisa. I could make a callback joke about
But
it
you
being
won't.
cold out. Yeah, but I won't. I'm a gentleman.
So, what's the difference, and what does it mean, right?
You know, it's so funny. We calculated the volume, but it's right there on the sheet too. Like we didn't really have to do that, but
Thanks.
Yeah. So there's basically it is a $9 million worth of volume difference year over year, or not year over year, month over year, or whatever. I don't know.
Yep.
Whatever that correct phrase is, insert that there. So it
Hi,
does
Lisa.
represent what a 12% decrease, correct?
Yeah, 12% decrease in homes sold.
In number, yeah, unit count.
Yeah, in unit count, but our price increased by 7% year over year. And new construction sales increased as well by almost 18% for that month. So I think our whole point in this is just kind of like, guys, if you look at the numbers, I know everybody's scrambling and things are slowing down, and the Fed is talking about one more rate increase in November, rumor has it, and they've done it every time they said it, so I'm assuming it's probably going to happen.
Yeah.
You know, and to Craig's point about wanting to do like a new agent story and all that other stuff, there is still work out there. There are still buyers and sellers that need to sell their homes, that need to move into a new home, or people that are choosing to, you know, because they need to upsize or downsize or whatever. It is still out there. And, you know, I looked at some NAR statistics before we came on here, and NAR basically said, yeah, it's quote unquote possibly a housing recession, but with the low inventory and everything we have going on, it's not going to be like what your typical recession looks like. We're still going to have the strong prices. We're still going to be selling homes. They're just not going to move as quickly as they were.
Yeah, that's a good point. And quite frankly, anyone who was in real estate prior to COVID, I mean, we're used to this, you know, September through, you know, this September to kind of October. Like it slows down a little bit when schools, you know, go back into session and things like that. We're used to that. And then we're going to experience another slowdown from roughly Thanksgiving, or I'm sorry, sometimes as early as Halloween, you know, to whenever the weather breaks, which could be March, even April.
God, I wish that we would have a regular market. I don't think it's going to be quite that, but like we're having months, at least my team is, where it's like 2 months we have a bad month. Then we have like a really good month because it's like corked and like people are going back and forth and whatnot. And right now we've had an okay month last month. This month is going to be an okay. So it's just kind of all over the board. And that's kind of, you know, we have a lot of people in long term, and I think people are kind of waiting to see what's going to happen. We have November midterm elections coming up. And I'm hoping once the Fed does that last one in November that things are going to start to flat line out for the spring. I think we're going to have a really good spring. Yeah. That's my opinion.
I think we will as well. And I don't know, you know, I heard rumors of the Fed lowering rates back in the spring of 22, or of 23. But another key factor, though, you know, the Fed is not necessarily, they are worried about inflation numbers going up right now. They are worried about certain things. So it might not be a guarantee that they're going to lower or that they're going to raise rates. You know, there's a lot of fluctuations in like macroeconomics. You've got OPEC is lowering their oil production, which is going to cause gas prices to go up more. The Fed is not going to want to put the country into a big recession, a really bad one. You know, gas prices going up affects everybody, but especially the lower on the economic scale you go, it affects them disproportionately worse.
Yeah.
You know, so and then we're not trying to, you know, sack the whole country. So
yeah, I mean, they're trying to stymie
I hope.
inflation. So just because the Fed increases rate doesn't necessarily mean that mortgage rates and whatnot are going to go up. It just increases the amount. I know, but it just increases the amount that it costs for banks to borrow money, right? And so then it makes them less likely to borrow money, which in turn lowers inflation. And there's a whole like schematic to it. So it will mess with the rates for a minute, but it should start to stabilize. The problem is we've had rate increases almost every month or every other month. And so that's why you've seen the market volatile, all that stuff.
Well, and I think a lot of things are happening too. I think as the economy tightens up a little bit, there's less. Still have some supply chain issues, which are causing some products to not be sold, which causes some companies to not have the same revenue, which causes them not to give employees raises or to cut back a little bit on employment costs and things like that, which causes people to not spend money anymore. So again, we could do a whole show on macroeconomics that would be fun as crap for me, but would bore the crap out of everyone else, I'm sure. But there's a lot of factors, and that's just the bottom line.
So I think cut and dry, what is your opinion of how this last quarter is going to go to end the year?
I think it's going to go, because there's so much uncertainty in the marketplace right now. We've got uncertainty on a global scale with threats of nuclear war and things like that. So I think right now, it's going to be a very conservative, slower last quarter. I really do believe that.
Yeah, and I kind of agree with Craig. But I feel like it's going to be more of a steady thing, right? It's gonna start to steady out. You know, the people that have to buy and sell are going to buy and sell. But the thing is, like, this heyday of the last 2 years of literally real estate deals falling out of the sky aren't going to happen.
Hey, Melissa.
This next 6 months is going to be grind time. And, you know, that's what I'm telling my team. It's going to be keep the lights on stuff. Like, you're taking whatever deals you can get. And for those of you that, you know, aren't used to that, it is happening. We are getting closing costs. We are getting homes for under list price now and other things like that, and homes are sitting. They aren't selling in, you know, 24 hours unless they're totally remodeled and whatnot. And some of those are even sitting, I think, because of, you know, interest rates and buying power and all those kind of good things. So
yeah, I mean, and I think you know, a message to all my co-managing brokers out there and things like that. I mean, right now is the time we need to be telling our agents to reach out to their sphere. You know, talk to everyone. You know, if you have a customer that hasn't refied in the last 3 years, shame on them, first of all. But second of all, they need to do it now before the interest rate goes up even higher. If you have got clients with rental property or investment property that they're considering selling, we're already past the peak.
yeah,
But still, you know, you could still sell it when you're still at an advantage. It's fine. You know, we're not near the bottom, and I honestly, because of our proximity to Chicago and just the financial structure in Illinois with property taxes are way higher, if the economy gets tighter, it's going to affect them harder, which is, again, going to make Indiana more attractive for them to come over the border.
Yeah.
And quite frankly, if you look at the population statistics from Illinois families moving over into Indiana, that's really what's going to keep our market and protect us from another recession. So I am not doom and gloom when it comes to our current market.
No.
If you follow the numbers, and even if you look, we should have brought the Illinois population numbers, because Indiana is getting the bulk of, you know, because we're closest to Chicago anyway.
Well, see, I think we're, you know, Lake County's getting Illinois, and then Lake County's moving to Porter. Porter is moving to LaPorte, and I think there's this.
Melissa, Melanie,
there's this.
Jen. Thank you.
I think there's this migration kind of happening, right?
Yeah.
So Illinois is kind of moving over because of what's happening in Illinois, and we're going to still benefit from that, kind of regardless of what happens right now.
Yeah.
And
Well, I think it's
kind of a good thing for us.
Sorry. Yeah, I think it's smart. I mean, if you work somewhere in Chicago and you get those Chicago wages, but you live in Indiana, I mean, your living expenses are almost double just living across the border. Like one street over, it's like your living expenses, your monthly expenses are double.
And commute takes an hour anyway, even if you're 4 blocks away, so you might as well just drive it.
Yeah. So I don't know. You know, it's as long as, you know, Indiana's been very smart over the years on making sure property taxes are capped and things like that. So we've got a lot of really good things going for us, and that's why it's an attractive state to business and you know, homeowners and stuff like that. So and we don't have as much crime as the city of Chicago. Not to gloss over one of the most important things.
Truth on that, but
yeah. So
I think that's our opinion. I mean, I think we are going to be okay, but it is going to be put your head down and, work and work and work.
Yeah,
you're going to have to.
Yeah, I don't think it's going to be that bad. I think next year will be fine. Yeah. However, I'm telling everyone that, hey, you need to work right now. Like, this is not the time. This is normally the easy time to relax.
Not this year.
Every deal we do, right now we have more real estate agents in our profession than we have in the past. Those numbers are going to start to shrink, which are going to mean the professionals that do this full time, in and out every day, I mean, they are going to start to get more market share.
Yeah.
Right now you've got the random, people that the market's so good, a lot more people go and get their license. They do their 1-2 deals, and then they realize, oh crap, real estate is a real job. I just thought it was fun, opening doors, HGTV in it, watching, looking at some people's stuff, and and then they find out, So anyway,
that was a spam call, folks.
So anyway, so I think so that's the bottom line. Volume is up 7%. Sales are down 12%. Units are down 12%. So,
but we only have a 9 million volume difference, and that I think says a lot between these last 2 years. Like,
what's up, Sarah?
We've sold 80 some odd less units, but it's only a $9 million difference. Like, that's a huge deal.
Yeah. Yeah, and for the whole county, I mean, it's not too bad.
Shows the market is still strong. But it's an adjustment, and having those conversations with your clients is a really important facet of that right now.
Yep. So anyway, any last minute questions, throw them in there, or we do read and respond to comments and things like that afterwards.
Yep.
Feel free to share our video out, especially if you're in any kind of like real estate agent groups or whatever, and you think that this would be informative for them, please do it.
All right, guys, that's all we have.
Also, here's a last thing. If we know anyone that we're still looking for a producer of the show.
Yeah, we are.
So if you think you could make us famous, and you want to be included in it, let's go.
Right.
Reach out to me or Nicole.
All right. Thanks, guys. We will see you. Well, I won't see you next Friday because I'll be at the Zillow conference. This guy will see you next Friday and have some kind of guest co-star, and we will see you then.
All right. Thanks, everyone.
All right. Bye, guys.